So hello everybody, do you see my PDF and do you see my camera too? Do you
I
see
do.
me or not? Okay,
Yep.
everybody's seeing me. Okay, well, first of all, thank you so much to TopStep Trader, and I'm gonna talk about tick charts versus time-based charts today. About Simplemente trading, saying that Simplemente trading was established in 2015 in the USA. We are listed at the NFA, National Futures Association, as an exempt commodity trading advisor, and we have received several certificates of course completion at the CME Group. We are bilingual. Most of our services are offered in Spanish. We have an online course that with 100% guarantee and a live trading room every day. And automatic trading systems are available for TradeStation's users, mainly with people that has experience, as well as VPS for AWS that we use. AWS Amazon is all ready to use. And TradeStation recognizes our educational services too, and they provide to our students a special program with a platform and all CME group data fee and 20% discount in commissions to help finance the cost of tuition. So they do our course and TradeStation discount commissions for them. About Sandra Bellizzi. Well, one of the many immigrants at the USA. I love USA. I really love it. I was born in Uruguay actually, and now I am Italian citizen married to American citizen. Some of my mentors have been Sean Carter, Luis Borsellino, Carly Gardner, Linda Raschke, Mark Fisher, and others now retired. All my tuition had been in the US. I now live in Tenerife, Spain. Due to my father's health, we visit the States often because we have family and friends there. So I trade live and train my clients to trade for a living, and I recommend to my clients to start their trading career with funded accounts. So this is my book. It had been written a few years ago. The last edition was in 2016. It's very colorful, but unfortunately it's in Spanish. Had been a success actually. Many times had been bestseller in Amazon. It's about my methodology. I changed here and there a few charts, but mainly the methodology that I use is still what I use every day. So what we are going to talk about today, using tick charts to find opportunities to trade the S&P 500. In this case, I will refer only to the S&P 500 and the mini futures contract. So first, we are going to talk about why ticks, the difference between ticks and time-based charts. We are going to talk about my settings, how I set my charts to trade the S&P 500. We are going to talk about high probability entries, trading with high probability, my favorite setups to enter a trade. I will explain. I will talk about examples of live trades that we had been doing in the trading room and that I publish in the social media too. And we are going to refer to time-based entries, the ranges that allow you to set zones to enter the market. And we're going to talk about money management too, a few suggestions that work for me. So what do you see in a time-based chart versus a tick chart? Well, you're going to see plenty of charts. So this is, I think, the only screen that has written only things because I like to draw and I like to show examples. So time charts can be set for many different time frames. If you use a 1 minute or a 2 minutes or 5 minute chart, then a new price bar forms when the time period elapses. So on a 1 minute chart, a new bar forms every minute. And you see the high, you see the low, you see the open and the close for the 1 minute chart. You can use candlesticks or you can use bars. In a 1 minute, 60 price bars are produced each hour. So assuming at least one transaction took place in the asset you are following. So it's every minute, or at least you see when there is low volume, you can see in some assets, a line. So this is the most popular among day traders. So what happened with the tick chart is completely different. The bars on a tick chart are created based on transactions. No transactions, no bars. So you don't have the noise of having low volume and bars formed that create noise. No, you don't have that with a tick chart. For example, I use a 522 tick chart for the ES. I see other traders use a 512 as well as 610. I've been seeing they are the most popular that I have been seeing other traders trade. So there is not an exact rule for this. Many traders match the number of transactions with Fibonacci numbers, sequence numbers. This is very, very common too. And periods with low volume of transactions will have a smaller numbers of bars or candles. The opposite happened with high volatility. So let's see some examples. This is the period, is the after hours, when at 5 p.m. East Central Time start the market, and until Tokyo opens, Asia session. So you see in 1 minute chart, this is a period that sometimes in earning seasons you can have more volatility and more movement, but usually it's a period that you don't have so much to trade there. It's low volume. So what happened with the tick chart? You can see here is the same period is about it's about 3 hours, right? You see all the candles in 1 minute, but you go to the tick chart and there is a very thin vertical line that I don't know if you can see, but actually is showing less bars formed because there had not been enough volume to form more. So reduce the noise and show you that had not been so many transactions. So what is powerful at a tick chart and that I love, like to me, is like helping me to tape read actually. When there is a lot of activity, a tick chart shows you more information than a 1 minute chart. This is the same, this is all is happening in only a few minutes, only in 15 minutes. But because it's the opening range, this is the vertical line showing the opening range, so at 9:30 is time that is 8:30 Central Time, you can see in the tick chart in a few seconds that can show you what is going on with the price. So this information includes more price waves, consolidations, and a smaller scale price moves. When a market opens several tick bars, within in the first minute or two, this may show multiple price swings that can be used for trading purposes. Tick charts allow you to get into moves sooner, take more trades, and spot potential reversals before they occur in the 1 minute chart. Today, for example, that had been a very sideways market that had been in a range the whole day and very similar to what happened yesterday actually, because tomorrow is Fed day, so I understand this kind of moves. So we had been scalping in ranges, and it's very powerful what you can see in the tick chart. So the same that was plotted here, you see all the bars and you can see plenty of opportunities to enter the market. This is a 522 tick chart with a Heikin-Ashi. It's a modified Heikin-Ashi indicator that I have here. That actually, it's kind of showing you what's going on. And so I will explain each trade that I take with this. And it's really is a powerful tape reader, and really you can see is sometimes avoid many of the noise that is happening in a 1 minute chart. I'll sometimes show you more things that a 1 minute chart is showing you only in one candle. So it's like it's letting you know what is going on inside that candle, before it finished form. So it is a 1 minute chart, and it's the same period. You see less bars than in the tick chart, and you see that it's a movement that goes up and then retrace and then retest, but because the bar closed here, it's not showing you exactly what's going on in this period of time. So the other chart allow you to see the formation of you can see that it's a kind of a head and shoulders, and so you can see it very clear, the formation, and you can enter a trade with more information than what is a simple candlestick. So it's giving you even the possibility to enter while these 1 minute candles are forming. Let's see another example. This is when it was high volatility. So this is an extreme example. This is an 89 tick chart instead of the 522 that I use, but it's showing you in 1 minute what happened with the ticks. This was when the volatility was high. I think that this was in April or so that I entered the trade, and was like a bazooka trade. In 1 minute it moves several ticks, and I made a bunch of money. But this is an extreme, and I put it on purpose in 89 tick chart, because if I was using a 1 minute chart, it will be showing the enter and the exit in the one bar. So in this 89, I can show you what happened during the trade in all the time. So I remember that I entered and the market went in seconds up, and then I was able to put a trail stop, and then with the trail stop, automatic trail stop took me out here. But immediately when this happened, it moved so fast that I want to show the audience what is going on in all these seconds. Look, it's forming several bars, and I'm never gonna use in the ES an 89 tick because it's too fast, but it's to give you an idea of what can show you the transactions tick chart. So the tick chart adapt to the market. More bars form when there are more transactions, warning a trader that activity levels are high. The 1 minute chart does not show you what happened inside the bar until it's closed. You have to use other indicators to show you. So, for example, the head and shoulder formation. You can see in the tick chart very clear the formation. This is another example. So how I enter a trade using the tick chart, what rules I apply? Well, you can enter the trade, you put in a sell order here, or you can wait for the retrace, and you can see even the retrace very clear. I use an 89 exponential moving average and a 200 simple moving average, and give me high probability trades to enter, very safe, and to keep on the trade. So the same period in a 1 minute chart is gonna show that it went up, and there is a retrace that cannot go further up and then goes down. But with the tick chart, you can see, and you can enter even in these kind of flags that forms. You have high probability trades to trade this, and most of all, beside that, I use some lines that, for example, I use pivot points. I use the high, the low, and the close of the previous day. I use market profile too. So between one thing and another, I took experience, and I took my methodology is a little bit of many things that had been over there for many years. So I adapted to what I feel comfortable to trade, and I will show you many examples now of trades that I take and are high probability. So when I will be entering this trade, probably, maybe, sometimes, if there is an important resistance that I see in larger time frames, maybe I could be entering here, or I could be entering once it goes below this moving average. But the safer way to go is once it retraces to the 89 and retraces to where is the neck and then goes down. So you can enter with a limit order here, or you can enter with a limit order when it goes again below of the 200 moving average. It's really a high probability trade that I take mostly every day. To have this kind of formations, you have to have a trend day, right? Not a range, a narrow range day. So this is great to do it with when you have big trends, right? So again, in the 1 minute chart, you see all candles that are all red, but you don't see, some of the swings that allow you to try to enter if you missed all this, right? But because many times when I start trading, many times I take a scalp, so this allow me to re-enter in certain trades. And then this is another example of live trading using a 1 minute chart. It's very important that you see what I take in consideration. First of all, I am above of an 89 exponential moving average. You see this blue horizontal line? This is the close of the day before. This magenta line is the pivot point. So here makes almost no sense what you see in each 1 minute candle, because what you see is like, okay, she entered here, exit here, enter here, exit here, enter here again, added here, exit there, enter again at the pivot point, took a profit, added here, took it here, added again, entering in the pivot point, and then hold it until the trail stop, automatic trail stop that I use of 2 points, took me out. So if this in 1 minute makes not so much sense, but if I show you what's going on in a tick chart, makes a lot more sense. Here, the close is the close of the day before, or the settlement price, like many people refer to that. So what I do is I bought that level, I took profits. What I do at the beginning of the day, always take scalp trades. So I like to trade the ES and take small profits, 2 points, that is $100. So I take this, then when retrace again to the close of the day, I buy it again, I take my scalp. Retraces again, I take my scalp. Retraces again, I take my scalp. You see, here I added because it was in the same position. What I was buying here was below the pivot point. I was buying the Globe's high. That I'm going to explain what is the Globe's high in the next screens. So I bought, many times I call it by names, certain levels. So I use levels like I refer to someone that I know. So someone that I know that is called John, I call John. So I like the close, for example, to have it draw, and I call it close. I call it by the name. Okay, you are the close. I am buying the close more than a price exactly. I am buying the close, or I'm buying the breakout of the Globex, or I am buying the pivot point. So you can see flags, to me, are very clear to use stick charts to see flags. Between the flags and the pivot point entries, that you see that I take very tiny. Here even I took one point because I saw a resistance, but then when I saw consolidation with the tape that they were respecting, the pivot point, I bought the pivot point and I made a profit, and this was only the 30 minutes from the opening range. So look at how many points I did: 2, 4, 3, 2, 4, 7, 9, 10, 11, and 4, 15 is $750, and I did it in half an hour, scalping actively, you see, and following the trend. Someone will say, okay, and why you didn't went long here at 49.50 and stay long until you reach the resistance at 60, for example, or you stay long, keeping the position? Well, I like to scalp. I love to scalp, and it's very profitable for me. So I like to make the money, and that's it. I close the day. Once I reach something that is kind of 10 points of the S&P 500 or a little bit more, that's it. I close the day. And what I see and what I make decisions, this is what the screenshot of my trading room. This is what people see when they enter in my trading room. So I use the tick chart here. I use the advanced decline to see the trend of all the New York Stock Exchange. I see the tick chart to see if there are buyers or sellers in all the New York Stock Exchange. And I follow and I see the Nasdaq. So what had been going on many days is that the Nasdaq had been mostly pushing up, and the advanced decline, mainly the Russell, had not been pushing up so much. So there was like a fight. So the S&P was pushed by one side and by the other. So many times creates some ranges or some sideways markets, this kind of behavior. So it's going on that because of that, because the market is not everything trending up in this sideways market. So that's what's going on these last days, mainly that we have the market consolidating the highs, and they don't want to make a new highs, but they don't go low neither. So it had been these last days in a tiny range and sideways. So had been most of the days in kind of narrow range too. So this is what's happening and why it's happening. So I use for the Nasdaq the same, and I am gonna go now through examples of trades that I did live in the trading room and that I published, to have an idea of what make me trigger certain trades. First of all, I draw supports and resistances. I do it in the other chart. I do it in the Renko chart. I like Renko for that issue. You see different colors, that I put. For example, this pointer is to show the Globex. This other is to show the 30-minute opening range. I will talk about that in a few minutes more. So what is going on, why I trigger in certain levels? I see a support in this kind of days, so I buy the support, the first support that I had. I buy and I start scalping. I see the market going to the next resistance level. I wait for the retrace, I scalp the retrace, and I see that the market is not able to do a new high. So this is an M formation or a double top, right? So below the 2 moving average, what I do is to trade with a sell stop when it breaks below the 2 moving average and after the M formation happen. So I take a scalp. So I could be entering this trade and keep the same all the way down. But in this case, I took profits. Then I go to my trading plan and what is my other chart, the Renko chart, and I see when is the next level of support. Once it breaks after doing a flag, once it breaks, you can enter the trade again, you see? And then take profit in the next support that I had. When it breaks this support, allow me to make another trade, and then I wait for a flag after I see, because I was waiting for this to retrace to the 89. But when there is a strong trend like this, you can re-enter the trade with high probability, taking profits based on what is my trading plan, the supports and resistances that I have drawn. Then this again allow me to do it in the first half hour of the market. This was the days ago when there was much more volatility than these last days. So allow me to do a nice profit. Another example of what I use. I buy the market once it is above the 2 moving averages. I buy the blue. This is the start of the day. I gave the limit order to buy at 3,142, and what is the setup that I used to enter? 89 exponential moving average, yellow line. I enter with a blue Heiken-Ashi and I take first profit 2 points. How I do re-enter? I re-enter with the break of the high. So I enter here with a breakout. I take profits again. You may say, okay, Sandra, but you could be entering here and take all this profit, 10 points. Well, no, I didn't, because at the beginning of the day, usually I trade and scalp. But look at the opportunities that scalping with the trend I can have. I'm very safe to do it. I wait for a retrace after this, right? I don't enter. If it is not a breakout that is clear in my trading plan, I do not enter, above the moving average if it is not in certain level, like a pivot, like a maximum of Globex or something like that. So I wait this to retrace, easy. Then when the blue line forms, the blue bars form in the Heiken-Ashi, I can enter again, and then the same again. I enter again and add, and then I wait. Instead of chasing the market over here, no, I try to don't chase the market, and I wait to get the closest possible to the moving average. While it is close to the moving average and there is a blue Heiken-Ashi, I take the trade again. And the same here. When I do it, it goes and retraces to the support, and once it forms a blue, okay, I can enter the trade. And then after I collected all these choose, then I go for more. And I take profits in the resistance that I had in the trading plan, for example. So I add with it's very accurate, the methodology, very accurate. And most of the times allow you in 30 minutes, 40 minutes to do a nice profit for the day and have really all trades that are explained in the methodology, because it's retraces with confirmation to the 89 exponential moving average, and there is a trend, of course. Well, this doesn't work in sideways market. We are going to see examples of sideways markets. But when there is a trend, it's a very nice and very visual setup to enter the market, and really I like it, and it's very effective. This is another day that you see that there is an M formation, double top. This red line, horizontal red line, means the low of the day before. So we have a double formation in the low of the day before. And in M formation, I take like an exception a trade, because actually according to my rules, the valid entry is while the price goes below the 2 moving averages. That is the trade that I took here. So I took this and immediately took profits. I took a retrace here before that, and very nice too, you know, is a flag below the 89 moving average, take profits, wait for it to retrace to where was one of my resistances in my trading plan. Then I take a small profit, I take a small profit. I see all this rally, and you may say, why, Sandra, you started to trade here at the top and you missed all this? This was a volatile day, you know, many times you can miss that. The entry, you know, should be, you know, below, not here. But why I took this? Because this was the close of the day before. This blue line, close of the day before, and went to the resistance that I have in my trading plan. So I take 2 points here, easy, and then when I see the formation, I take first the reject of the close of the day before. I take 2 points. I am above the 2 moving average again, so I take these 2 points. The thing keeps falling. So what I do, high probability trade, confluence the low of the day before, below the 200 moving average, below the 89 moving average 2 exponential. So I take first a scalp, 5 ticks, 5 points, sorry, that is 20 ticks. I see the possible support. You see the support here, support here. So what I do is I wait to the next break, because this was, I could enter here and left it, you know, with a trail stop and take all the way down. But even, you know, taking small profits, I was able to enter here at the break of the other support that we had before, all written in the trading plan and in my charts. So I take this and allow me to, I could be staying on this. I took profits because there was a support, but well, I want to show you that even in the 30 minutes of the opening range, taking a small profits, I can make a huge run. And I keep it, and that's it, and I close the day. But I take, this is examples of high probability trades that really works for me. So I'm going to take some water. Another example of trades. You see again the formation, kind of a head and shoulders. Once it breaks below the 89 moving average, I can take the trade. I take profits because could get support in the 200, didn't get support, went down. So I wait for this to retrace to the same place that I did enter short before. The thing goes down below the 2 moving averages. I don't like when the market is, you know, crossing back and forth the moving average, but in this case I'm just entering with 2 contracts because I remember that this was kind of a pivot point or something like that. It was an important price, 32.11. So I took profit first with taking 2 points, and I used a trail stop, and after it went down, it retraces and the trail stop took me out. I could be entering the trade again here. I could be entering the trade again here. And I want to show you some of the strategies that I do with price action. You see this high, you see this swing, you see here that had been support before, support, and you see here it's support, you know, support here, resistance here. So only for price action, just only price action, I see 32.16 like a support, and I take profits where I see the next resistance. I see that the resistance transforms into support. So after I made my base profits scalping, then I go for more ticks and then I re-enter here and I take a scalp first and then I go and take profits. Look at where the green horizontal line, this green horizontal line is the high of the day before. So I take profits just in case in the high. I remember perfect that after touching this high, the market kept going. But look, even at this, I took a nice profit. Another example, this is a very sideways and choppy day. You see the market all over the place. You see the moving averages all tangled, going back and forth without a trend. Even applying the rule that I call moving average rule, you can scalp very safe because below the two moving averages with a red bar in the high Alizi, I can take a short. Again, retrace to the moving average, allow me to take another short. You wait the thing to move. I see that it starts sideways, and I remember perfect that this was a level that was in my trading plan, like an important level of support. Here, this trade, you can take it or you cannot take it, okay, because I am below the 200 moving averages, but because it was supporting the 89 moving averages, I take a 2 points target trade. And then I wait for the retrace, and this is a trade that I take many times. Once the market, the price, goes above the two moving averages, I take in the 200 moving average, I take it like a support, and this is what gives me the opportunity to go long and to scalp. The market keeps moving, I take only a few ticks. In this retrace above the moving averages with the blue, I take a loss because the market went down further. So I take a loss. I always take a loss that I take only 2 points stop, 2 points and a half stop. I don't use more than that. So I make first like a base of taking 2 points, 2 points, 2 points, 2 points, and then I go further. So this I took a loss, then I enter again, and then I enter again. So I establish prices and I see supports and resistances that I draw in my trading plan. Opportunities to take advantage of market moves with ranges. So we call the Globex a range that had been traded from the opening of the new session, like 5 p.m. Central Time, of the futures contracts, and the opening of the New York Stock Exchange at 8:30 Central Time. When the market wants to expand the range, you can enter a trade with high probability if there is momentum going on. So I have here, this is in blue, you can see all the Globex period. Okay, so this is the low of the day before, support. This was the opening of the day before. This is the close of the day before. So I use the close of the day before like a support to enter along, or if not, you can enter along in that day once it breaks above the high, the Globex high, and the high of the day before. So it's a high probability trade. And if you see the 30-minute range, this is this candle between 9:30 and 10. Usually I take that 30-minute candle and I draw the low and I draw the high. So once it breaks above or below, I enter the trade. So this, you need not the market condition that we had today, and yesterday, that is before the Fed announcement tomorrow, that is in a narrow range. So when you have trend days that can span, can give you the opportunity to enter a trade and to stay in the trade for a long run. So it's a high probability trade. I like to use it many times. I do it. So you had to wait until 10 o'clock. So and 10 o'clock is time, or that is the same that 9 o'clock, 9 a.m. in central time. So you draw, the high and the low, and then you can enter with a breakout. Simple as that. So what I do every single day before I do anything else in the trading room that I do in Spanish, I draw and write important levels. I have a special daily routine. I have a certain amount of minutes that I dedicate to do each kind of things. I am like a kind of a very structured person, that I need to have like 10 minutes to do this, 5 minutes to do that. I have everything in order in my trading desk, and I know at what time I have to have these numbers drawn and written. So I have a special daily routine. So I draw the plan, I have the supports, I have the main levels of the day. I put a color, for example, for the low of the day before. I like to use the indicator that have most of the platforms, and I like to order to draw it in red. The same with the high, I draw it in green. The close, I draw it in blue. The open in white. The pivot point, I draw it in magenta. The Globex range, I like to use dots. I draw the point of control too. I take notice of the volume profile, and I know what is the point of control. Then many times, like the examples that I showed you in one of the trades before, I bought resistances was 49 resistance. So once I see momentum and the resistance become support, so I can buy that support. And then the next level was 54, was the pivot point, and the point of control was 53. So I allow me to buy the 54 and the 53 and keep the trade until, for example, the next level of resistance. So I have all the resistances for this day and for many other days, because I use a continuous contract, so I keep supports, and I keep adding every day resistances and support. So I remember actually the prices from previous days where I bought and sold before. For example, today I was remembering that at 32.24 we were buying the market yesterday, so today I bought it in that level. I saw at 22 today a support, so I buy it again. So I remember prices from the day before, and I use that in to allow me to be consistent trading. So first of all, I start the day always trading small, like you saw, only with one contract. Second, most of the days I try to make some profits at the beginning of the session, like 200, 300. So to me, this is like the base, or like a support of profits that allow me then, after I do that scalping, to go for further profits. Third, if the market conditions apply and there is a trend, I detect what kind of day we have, then I add one more contract. For some days, due to market conditions, I will not apply a trail stop and take the home runs, utilizing my methodology. First of all, I detect if there is a narrow range or there is a trend day. So if it is a narrow range, I will only scalp. So I will sometimes scalp the markets even if I miss some opportunities to make more. Many times I will miss trends and grab only a few ticks here and there and still feel good anyway. If I apply an entry that makes sense, you saw many examples that there was a huge trend and I was only taking a few pieces. I don't mind doing that if the trades make sense. So 5, I have a profit or a target for the day that I try to make in the first hours of the American session, like I show you all the examples. 6. I stop trading for the day if I am down 60% of what has been my average winning day. And 7. I only trade scalping the markets a maximum of 2 hours per day. And that's it. Because scalping and doing all this kind of trade is very demanding, and you cannot last too much doing that. So I use volume profile, always notice what is the point of control, of course. And this is another example of taking profits with the trend below the 89. I take scalps. Even here, I sold the low of the day. I took a loss. Doesn't matter. Above the 200 moving average yesterday and today, and this happening, many days. This is a high probability trade for me. Once it is above a certain level of support or resistance and it's above the 200 moving average, I take the profit. I take the trade. Here, the close of the previous day, I take the trade. A scalp, I take the trade. Here is not such high probability, but I took it anyway. Here is more high probability, and here is more high probability. This was very fast, and here is an example that I took the opening range, the 30-minute opening range. So once it broke the 30-minute opening range, I took the scalp and took profits with the resistance that I have in my trading plan. So that's it, and I am open for questions. So you can follow us and contact us by Facebook, Simplemente Trading, or by me, Sandra Alizi, Instagram, Simplemente Trading, our YouTube channel, that is Simplemente Trading 2. You can write us at info@simplementetrading.com. We have a toll-free number, 800-795-1979. And I have a special. Due to the COVID-19, I am gonna do I Stay Home. It's a guaranteed online course with 6 months of trading room every day with me, and I will have a 25% off from July 28 to August 7. Then goes up to the regular price. This is a second special that I do because of the COVID-19. So do I have any questions from the audience?
We have a few for you. So one of them is, would you ever consider translating your book into English?
Oh, yeah. Even my husband, that is American, doesn't speak any Spanish, had been asking me, and many friends had been asking me to translate it. But, well, I think I will write another one.
Great. Somebody else wants to know, when you enter a trade, what is your usual risk? Do you use tick chart for signal entry or to plan trades on higher time frames as well?
I do both. I like to see bigger time frames. I start with daily charts, and then I do like an structure of the day. I like to draw supports, resistance, and to put names. First of all, I follow this. So many times I trade the numbers. You see, the prices that I put here, to me, are very important. The prices that I put here.
Great, thank you. And then somebody asked if you have a live trading room, which I know that you do. You're very active in your live trading room.
Yeah.
Is that correct?
Yeah. I have several subscribers, but it's in Spanish.
Great. I believe this user is a Spanish user, so that's perfect. Somebody asked, how do you gauge momentum?
Well, one of the charts that I use is a Renko chart. I like how the Renko chart, I use a custom Renko with TradeStation. You can use Unirenko with Ninja Trader too. And first of all, I use the Renko charts because show me very clear when there is a trend and show me supports and resistances. So I like to use Renko charts, and I do the triggering using signals that the Renko chart is a proprietary indicator that I have, So between the proprietary indicator and the tick chart, if there is a trend, and I see that there is still a trend, so I try to jump into that trend using, what the tick chart is reading inside these rankles.
Great. And then I think we have time for one more question from Ty here, and he wants to know how much does your live trading room cost?
It's 99 per month, and I have 3 per 2, so you get 2 months, and I give you 3.
Perfect. There's a couple other questions as well, but we're limited on time here. So if these folks would like to ask you those questions, is the best way for them to reach out to you, info@simplementetrading.com?
Oh, yes, of course.
Perfect. Okay, great. Well, Sandra, thank you so much for your time. I really appreciate it. I know I got a ton out of it, and it looks like quite a few folks in our chat room here did as well. So thank you so much for your time. This was wonderful. I really appreciate it.
Thank you. Thank you. You have been great. Thank you. Thank you, TopStep.
Thank you.